the change in tone and tenor of the market. What Joe was talking about, time to play a little more offense. You bought back Amazon and NVIDIA, sold them not that long ago. I guess in late April, you were out of both of those names. Now you're in again.
Yeah, actually the timing on the purchase was April 25th and May 1st. So I've been in for a few weeks. The sale of those was earlier. The most recent sale, though, was Amazon. And look, it's been a great trading market. I haven't touched my my core names of Meta, Microsoft, Leidos, Taiwan Semi, etc., and Netflix. In fact, I've added to those during the period. But it was a great opportunity to make money in the market, and I did just that. So I didn't catch the rally at the beginning by any stretch, but selling them at the highs that some got back to, some didn't, and buying them back down, not the lows, but quite near, is how traders make money in the market.
Why, you didn't tell us about this yesterday. Why did you tell us about it yesterday?
I did whisper to you.
April 25th to May 1st, you bought back Amazon and NVIDIA.
Right.
Well, you whispered it to me when?
I told you while you were on set, and you said, wait, I'm listening to Kevin. I also mentioned it to the others yesterday.
Okay. All right. So the point is you're ready to play more offense.
Yeah, as I said, I've been saying for the last week, I'm pretty fully invested now, so I am. Look, a lot's going to depend on what happens after the 90-day window closes. And what we've seen is that there's almost a complete give up on the tariff moves wisely that Trump initiated. And so we're now down to about a base case of 10%. I think that will continue. But there's always the unsureness of what the administration's doing. So you still have to be cautious in the market.
I mean, NVIDIA is back above its 200-day for the first time since February.
Right.
It's back above $3 trillion in market cap. It's bigger than Apple again. It's really been a remarkable comeback. Can we get a 1 month rather than an intraday, guys, please, to show you the bounce back in this stock, which was under 90 bucks. And we're questioning whether this stock story was done for a bit, and it's had this really remarkable rally back. Jason Snipe, what do you make of that move that we've seen in NVIDIA?
Yeah, no, it's been super interesting. Obviously, the stock is back to flat for the year. It was up 20% in the last month. I think there was a lot of concerns, early part of first quarter about export controls and how that was going to play out for the stock. Concerns around China and what's going on there. Obviously, we heard yesterday the investment from the Middle East, and I think that's going to be powerful for the name. I think if you go back to their last report, they talked about $1 trillion in capex over the next few years to build out, AI factories. So the story hasn't changed so much in terms of their pole position as far as AI is concerned. But this has been a boost, and this has been a boost from the news from the Saudis yesterday.
5-day win streak for NAS, highest level since February as well. You look, NASDAQ's gotten back above 19.
Citing successes in autonomous AI programs that could help counteract export limits to China starting in 2026, Bank of America increased its price predictions for NVIDIA and AMD on Wednesday. The bank increased its target price for AMD from $120 to $130 per share and its target price for NVIDIA from $150 to $160. Separate multi-year AI infrastructure partnerships with Humane, a division of the Saudi Public Investment Fund, were launched by NVIDIA and AMD. According to Bank of America, these initiatives might be worth $3-5 billion a year, or $15-20 billion over a number of years. Sovereign AI is expected to generate more than $50 billion a year, or 10% to 15% of the $450 to $500 billion worldwide market for AI infrastructure, according to BofA. With an emphasis on training and inferring LLMs in local culture, language, and needs, sovereign AI, according to BofA, perfectly complements commercial cloud expenditures. It may also help address issues like trade restrictions with China and the U.S. data center's restricted power supply. With 18,000 Blackwell GPUs valued at nearly $700 million in Phase 1 alone, NVIDIA is anticipated to get roughly $7 billion in direct contracts. BofA anticipates receiving several hundred thousand of NVIDIA's most cutting-edge GPUs over the course of 5 years. AMD's share, which might come to $10 billion, will probably start later in 2026 and cover networking, CPU, GPU, and its open-source software stack, known as ROCm. BofA reiterated its buy ratings on both NVIDIA and AMD, citing stronger long-term AI demand and GPU as the new coin of the realm. Although AMD's project seems to follow a joint venture approach with Cisco, BofA noted that it marks the first time AMD is on a similar footing as NVIDIA in terms of engagement in large projects. As a slew of trade news improved hopes for the AI chip giant, NVIDIA's shares jumped 5.6% on Tuesday, boosting the company's market valuation to close above $3 trillion for the first time since February. President Trump and other big tech CEOs attended an investment forum in Saudi Arabia on Tuesday, where NVIDIA CEO Jensen Huang announced that the AI chipmaker will be shipping its chips to Humain, a Saudi AI company, for use in its massive data center plans. The Trump administration might reach an agreement that would enable the United Arab Emirates to buy over 1 million of NVIDIA's AI chips, according to a Bloomberg report published on Tuesday. NVIDIA, Apple, and Microsoft have alternated as the most valuable companies in the world over the past year, but NVIDIA has fallen behind, failing to notch the #1 spot since January. Wedbush analyst Dan Ives told Tuesday that these deals show the demand story for AI chips is not just about China. NVIDIA is scheduled to report its first quarter earnings for its fiscal year 2026 on May 28th. NVIDIA's rally, Tuesday, comes after Monday's gain. That was part of a larger surge in the Magnificent Seven big tech stocks following the Trump administration temporarily slashed tariffs on Chinese imports to 30% from as high as 145% for 90 days, signaling a de-escalation in the escalation of the U.S.-China trade war. For the first time in years, the AI chipmaker has lagged the S&P 500 so far in 2025, as shares have been pressured by macroeconomic uncertainties brought on by Trump's trade war and increased scrutiny of big tech's AI initiatives. So, what implications does this have for NVIDIA stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Ed, what do we know about these deals that lump in a little company like Supermicro along with a big behemoth like NVIDIA?
Yeah, I mean, the unlock is the ability for NVIDIA and AMD to sell their latest generation cutting-edge processor, GPU AI accelerator into that market, Saudi Arabia, right? The Commerce Department announced last night they would rescind the diffusion rule, which in simple terms was a technology export restriction. The reporting had been that were it due to go into effect on the 15th, tomorrow, the US would not have enforced it anyway. And now the question is, well, will we get a new rule and what will the parameters of that be? But you're really smart to flag Supermicro, because literally what we're talking about is the building of data centers in the Gulf. If you can send the GPUs, then a name like Supermicro, which simply packages them into server racks, can then proceed with its deals to do that as well. So their deal with DataVault's really interesting. As you know, it's $20 billion. I would point out that that business is a much lower margin business than actually NVIDIA does, just by designing the chip. I think you also showed AMD. I would point out that the buoyancy of AMD is partly informed by a $6 billion additional share buyback they authorized this morning, which is on top of $4 billion they were already doing. So take that into account. But just look at the research on the sell side from BI. This is immediate sales growth that policy has unlocked for those two names in that region.
It's interesting, Ed, I don't know if you know the numbers to this. I realize this is very new news, but something that really struck me on the heels of these deals being cut or these talks advancing is the fact that this is being done in an energy super hub. Is there a chance here to really accelerate AI computing power through the Middle East, given that costs could actually be a lot lower?
Well, in short, yes. Building data centers requires several things: capital, space, time, and the correct political and regulatory environment. And most who follow the market would agree that Saudi and the UAE are places that conform to those specifics. So take the deal, for example, between NVIDIA and Humain. The first phase is 18,000 GPUs. We measure the size of a data center in megawatts, literally in energy demand. That first phase is a 500 megawatt data center. Technically, that's at the hyperscale level, what we call hyperscale. But if you compare those to data centers around the United States, those range from 5,000 to 11,000 megawatts. So it's small by comparison, but Saudi and the UAE have the tools to get it done. And that's why, again, you see from Bank of America or Bloomberg Intelligence this multi-billion-dollar sales opportunity each year for the chip makers, because they'll move fast in moving the product to those nations and start building.
Ed, there's a lot of talk about the Qataris giving President Trump an old used airplane.
I heard you talking to Anne-Marie about this. Go ahead.
And the security concerns there. But what about giving the Saudis, who have such a close relationship with China, these chips that are capable of beating the Whopper in global thermonuclear war? I mean, isn't there a security concern with sharing this kind of high-level tech?
There is security concern. And the whole point of the Commerce Department and the Trump administration reviewing the diffusion rule was the concern that if they allowed those nations in the Gulf access to the technology, those nations have a close relationship with China. They could act almost like a sales channel or third-party funnel. So what we do have is corporate deals. NVIDIA has a deal, Cisco has a deal, AMD has a deal, Supermicro has a deal. We do not have bilateral agreements between the United States and Saudi and the UAE. Those are expected nation to nation to come in the coming days. And how they address the China question is absolutely top of mind for everyone. But again, go back to the Bloomberg intelligence deck on what this means for sales growth of NVIDIA and AMD in particular. It helps them offset the revenue to China. So you'd think that those companies would play ball, be more conducive. And then the next question is, if they rescinded the diffusion rule last night and it won't go into effect tomorrow, what does the new rule look like? Does it explicitly codify restrictions on third parties passing the technology to China? You're absolutely right that that is the key question from here on in.
As competition intensifies from Chinese tech company Huawei, which is reportedly ready to start shipping chips competitive with NVIDIA's older Hopper chips, the administration has effectively banned the sale of NVIDIA's chips for China, a version of its prior generation Hopper AI GPUs called H20, designed to comply with U.S. trade restrictions. JP Morgan analyst Harlan Sur estimated that overall, NVIDIA will lose as much as $16 billion in the current fiscal year from the H20 ban. Meanwhile, the Trump administration has announced that it is abandoning a more expansive Biden-era policy, the so-called AI diffusion rule, which was set to limit exports of NVIDIA AI chips to most countries starting in May. After the AI chip stock took a severe hit at the beginning of 2025, when a low-cost AI model from Chinese startup DeepSeek raised doubts in January about whether U.S. tech companies truly needed to spend hundreds of billions on AI infrastructure, including NVIDIA's chips, the trade rule changes in April had the push and pull effect on NVIDIA shares. Simultaneously, investors are paying closer attention to how big tech is monetizing the technology in comparison to its enormous investments, which has increased scrutiny of AI firms overall. For the time being, big companies are still spending a lot of money on AI infrastructure. In their most recent quarterly results reports, Microsoft and Meta confirmed their ambitious plans to invest in AI, which caused NVIDIA's stock to rise. Meta increased its capital investment projection for 2025 to $72 billion, while Microsoft reaffirmed its $80 billion spending plan to develop AI data centers. Although NVIDIA's market value increased to $317 trillion on Tuesday, the company's shares are still down over 3% in 2025, and the S&P 500 has only returned to positive territory for the year. The stock price of the AI chipmaker jumped more than 170% in 2024, while the index increased by about 23%. 2022 was the most recent year that NVIDIA's stock underperformed the overall market index. The shares of NVIDIA recovered above its 200-day moving average on Tuesday, spearheading a broad-based tech surge. This is a good option for traders who want to invest their money. Additionally, investors seeking a more cautious approach to NVIDIA stock options trading may use a bull-put spread. You are always aware of the worst-case scenario beforehand since a bull-put spread is a defined risk strategy. This kind of investment offers flexibility in erratic markets and will profit if NVIDIA's stock moves sideways, upwards, or occasionally even little lower. In the same expiration cycle, the technique entails purchasing a lower strike put option and concurrently selling a higher strike put option. The trader obtains the option premium in exchange for selling the bull-put spread, and the risk is equal to the difference between the strike prices less the premium. A bull option spread on June 20th could be sold by traders who believe NVIDIA will remain above 125 over the upcoming weeks. A net credit of about $1.30 per share is obtained by selling the 125 put and purchasing the 120 put. With a maximum risk of $370, selling this spread would yield a premium of almost $130. That would be a 35% return in less than a month if the spread expires worthless. If NVIDIA's stock is over 125 upon expiration, that is. That level is a crucial level of support because it now correlates to its 200-day line. The premium seller would lose $370 on the trade if NVIDIA's stock closed below 120 on June 20th. That would be the maximum loss. By subtracting the 1.30 option premium per contract from 125, the trade's break-even point is 123.70. Given that NVIDIA is currently trading at about 135 this morning, you have 8% leeway before the trade becomes negative. If the stock drops again below its 200-day line at 125, or if the spread rises from $1.30 to $2.60, you may want to set an early stop loss. If the trade goes south, sticking to the stop loss level will assist you avoid suffering significant losses. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
Not that far on. In terms of NVIDIA, it has changed. While it still is the pole position, and I'm out as it gets to 140, which is where resistance was before, because you're actually seeing the chips that the big hyperscalers have been working on for years to remove their dependence on NVIDIA coming into the market for their own data centers and their own technology service, et cetera. So it has changed. Nobody's going to be held with those kind of balance sheets those companies have. They're not going to be held hostage to NVIDIA super pricing forever.
Bryn, the chips are ripping today. If you look at many of the stocks, by the way, we always talk about the SMH. You can look up the stocks. It's up nearly 50% off of its April intraday low. The SMH is now positive year to date by 1.5%, 5 days in a row. That's the first time since February. Is that trade back?
I think parts of the trade are back. I think AMD, which I don't own, has been left for dead. I think, Lisa Su is great. And so I think parts of it, because we were at this existential cliff that, Jensen went to Washington numerous times. He was just in Saudi about, hey, if we shut off China, we are shutting off innovation to America. And I think that's where the White House repealed the diffusion rule, which was supposed to go into effect this week, which would have made so many more export controls over a host of countries in addition to China and Russia. And so I think there was a timeout here. We are literally on the precipice of destroying this innovation. And so I think the rally is warranted. A lot of these stocks have just been left for dead. And so we are going to have more of a globalist America innovation win-win scenario. I think especially NVIDIA, which earnings, don't forget, haven't come out yet. They come out May 26th. And I think they're still looking for 65 and 50% revenue and earnings growth. So just monster numbers still coming out of NVIDIA. And I think Jensen will delight investors. So I think going into those NVIDIA earnings, the whole sector, I think, will continue to rally.
Yeah, I mean, AMD's been rallying. They had much better than expected earnings. They announced a buyback. Joe's talking about the buyback window being open. They just ran through it. $6 billion, their best day for AMD since April the 9th of 25. Really, before this massive move.
In keeping with the company's strategic focus on forming international partnerships, NVIDIA recently announced a major agreement with Saudi Arabia to expand AI capabilities. This action is in line with the general market trend, which saw substantial gains in tech stocks such as NVIDIA, Tesla, and AMD, reflecting the continued rise in the tech sector. Although NVIDIA's 17% price change over the past month is significant, it is in line with the trend of tech stocks generally, which is being driven by new alliances and general market optimism. In line with the sector's upward trend, as is demonstrated by the most recent market rally, these strategic actions boost investor confidence. NVIDIA's recent announcement of a cooperation with Saudi Arabia to advance AI capabilities may improve the company's standing in the data center and AI industries, which might lead to long-term increases in revenue and profits. The company's long-term total shareholder return over the last 5 years was exceptionally substantial, reaching 1,380.99%. Even though the immediate 17% increase in share price is consistent with the bullish market attitude. Investor trust in NVIDIA's strategic developments and tech industry expansion initiatives is bolstered by this performance. NVIDIA's performance over the last year exceeded that of the U.S. semiconductor industry, which saw a 21.6% return. It is anticipated that the positive momentum, which is being driven by alliances such as those with Uber and Toyota, will strengthen NVIDIA's AI position and have a positive future influence on both revenue and earnings. Revenues might increase by 30.3% a year, according to analysts, and profitability could reach US $158.2 billion in 3 years. The market's general trust in NVIDIA's strategic orientation and development potential is reflected in the share price's current advance towards the consensus price target of US $163.12, which represents a possible gain of 30.4% from its current level. According to Bloomberg's Mackenzie Hawkins, Jenny Leonard, and Ben Bartenstein, who cite sources familiar with the situation, the Trump administration is considering a deal that would permit the United Arab Emirates to import over 1 million cutting-edge NVIDIA chips. According to sources who spoke to Bloomberg, the agreement, which is still under negotiations, would allow the UAE to buy 500,000 of the most cutting-edge chips available year between now and 2027. According to the persons, a fifth would go to the Abu Dhabi AI company G42, while the remaining portion would be distributed to American businesses constructing data centers in the country. In noon trade, NVIDIA stock is up 6% to $129.91. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
It's been quite the recovery, KG, from, when you think about a little more than a month ago, and essentially what was a pain trade that you saw, the bearish sentiment, and now it feels like the bulls are back in control. Is that an accurate assessment?
Yeah, I would say for now, the bulls are back in control. They continue to gain ground on some of the losses that we've seen this year. And in fact, as you kind of talked about, we are up on the year so far, but we're not really at those February highs, but we are making some ground here. What's a little bit different about this bounce back than what we've seen in past recoveries is actually the participation that we've seen. It's not only just communication services and technology, and we'll talk about some of those news items, especially when you look at NVIDIA and the semiconductor space, but you continue to see some outperformance when it comes to industrials, financials also doing fairly well here. So it's not only just a short covering type of rally, but this is maybe a little bit of optimism that the economic slowdown will not be as aggressive as what we priced in earlier because of this, the tariffs being reduced, especially between the U.S. and China, as well as maybe some of these other deals or announcements of potential deals actually being priced into the market. I think there's still a little bit of a question about valuations when you're looking at forward multiples. They're still a little bit stretched. We'll talk about some earnings where you're still seeing companies really withdraw guidance or lower their guidance. And so it does make this market a little bit more expensive. But it seems like for now, the market's really kind of discounting that and trying to put dollars to work, selling out of treasuries, getting into equities here. This is actually a really decent hold. And for the bears, you really need to have some economic, slowing type of data to really try to knock this market down. It seems like for now, the bulls are actually a little bit optimistic about the latter half of this year.
Yeah, it makes sense. And, I love the point that you made about the performance and financials, because at the beginning of this year, there was this expectation that you would see stronger performance with the financials, especially with the expectation that we'd see more deals, more IPOs, et cetera. So it's interesting to see some of the recovery there. From a technical standpoint, what are you watching out for when you think about, sustained momentum from here?
Yeah, from a technical standpoint, what we want to really be able to do is accomplish that 5,900 level. I mean, we've already hit some pretty key areas of resistance that has been able to kind of, once again, kind of show that we have some strength into this market. But from a technical standpoint, obviously, we want to get back to those all-time highs. And we really want to try to get up to around that 5,950, 5,960-ish area here. That will kind of get us to the next leg of this upside move. From a technical standpoint, though, if you're kind of looking at it and you're a bull in this market, you'd like to come back, kind of retest some of these levels to the downside here, really confirm that some buyers are really going to step in and then move higher instead of having this really outstretched move to the upside here. Because at the end of the day, especially if you're looking at the last couple of trading sessions, the price action looks good, Diane, but the volume is a little bit light. And for mega bulls out there, you'd like to see the volume really kind of complement the price action. We just don't have that right now. But once again, bears really don't have a leg to stand on until we actually get some economic data that does show that there's some cracking into the marketplace here. And we just don't have that. And we probably won't have that for another 2 to 3 months, just based on the lag time that it's going to take in order for a lot of this tariff policy to be reflected in the market. What I feel is also kind of interesting for Q2 that we have to keep on the radar here. because we've lowered those tariffs, do we actually see a reacceleration of imports coming into the United States? And do we have the same type of scenario that we had in Q1, which we had so many imports and not as much consumption and a buildup in inventory that it created a negative GDP print? We don't want to see a Q2 negative GDP print. That probably would give bears a little bit more confidence that they probably can knock this thing down. But for now, all systems go. Technically, we're looking pretty good.
That's a great point about, Q2, although, you would think based on some of the economic data that is starting to come in and then where we're going with regard to trade deals, that it might be the economy may be shaping up better than we saw for Q1. Let me ask you this. The point about volume, though, is some of that just because of the time of year that it is?
Oh, we're not at that summertime volume slump that we usually see. That usually actually comes in around the first week or second week of June. Right now, I think it's, once again, the lack of... There's probably some short covering that took place. We had this capitulation type of week back in early, April, maybe mid-April or so, and then you started seeing some really aggressive volume, but it's starting to kind of wane over time here. So I think right now it's kind of a wait and see. We're following the price action, but you might not be too convinced that these levels are going to hold for now. And once again, maybe the anticipation of a pullback in the market is being priced in for a lot of traders out there, and that's where you could see maybe some light volume, less commitment to putting dollars to work right now, I think is really that trend. But we're a little bit too early right now for the vol crush type of summer event and the volume crush summer event. We still got about maybe another 6 weeks or so until that actually really comes into effect.
So let me ask you, some investors are obviously putting dollars to work in NVIDIA. It's back in the $3 trillion market cap club. So, good signal, obviously, for NVIDIA. What are you watching there?
Yeah, obviously it's the news headlines. NVIDIA probably got a little bit oversold, especially when you're looking at that $88, $89-ish level. You started seeing some buyers really step in, but you're starting to see the news flow really actually impact the company. And Donald Trump's trip to the Middle East is really showing some promising signs for NVIDIA and their ability to actually expand some of their GPU sales across the globe here. And we did see an announcement yesterday where they're going to ship over around 18,000 Blackwell AI chips to Saudi Arabia. This is going to be the first major order that we see going out of the United States here, and obviously those are very high profitability or high margin type of products here, and so that's going to be a tailwind for them in the near term. That gives you the fundamental story. I think the question mark is going to be the earnings announcement that we're going to get on the 28th of May. What does their guidance look like moving forward? We have been really kind of accustomed to seeing a guidance beat of around $2 to $3 billion on the top line when it comes to revenue. Is that going to be the same type of situation this quarter going around and moving forward here? I'm not sure if that's going to be likely, but the street is probably worried about more of a deceleration or maybe a slowing of demand rather than the acceleration of growth, because the year-over-year comps are going to be fairly hard for NVIDIA. So a nice breakout to the upside. It has broken out of this bear flag channel that we've seen develop here. You want to see it maintain above that 130 level and obviously continue to move higher here.